Hi, everyone, and welcome to the 7-Minute Takeover. I'm Eamon, and since I'm the one doing the intro, you already know that we're here for a deal decode, where our CEO, Rob Irwin, joins me to help interpret some of the business listings that we see on the Village Wealth Marketplace. Morning, Rob. How are you doing?
Morning, Eamon. Doing great. Thanks. Always fun to dig into these listings and give folks a bit of a behind-the-scenes look at what we're seeing under the hood and what's on our platform. Let's get into it.
Sure. So today we're looking at a bit of a different one. It's a US-based company providing executive airport transportation and logistics services in San Francisco, San Diego, Sacramento, and Buffalo, New York. A revenue of $3 million on the listing. Seller's discretionary earnings listed at $270,000, and an asking price of $2 million, presumably all in US. Doesn't appear to be any real estate, and the business is described as non-asset based, implying low capital requirements moving forward.
Yeah, I love this sector for researchers. The airport transportation sector is booming. According to industry stats, and the global airport transportation service market was worth $3.7 billion in 2024 and projected to hit $4.2 billion in 2025 and then 11.6 by 2033. This is serious growth. CAGR of about 13.5%. This growth is we think it's really just fueled by rising air passenger traffic. 5.2 billion global passenger journeys are expected in 2025, up 6.2% from the year prior.
Yeah, that's a lot of trips. Executive transport, like this business, is especially hot because travel is rebounding, with companies prioritizing premium, reliable services for their execs. Plus, there's a push for tech. Mobile apps for booking, tracking drivers are becoming standard in this sector.
Yeah, great point around tech, Eamon. It'll be interesting to see how smaller companies like this one that are listed just keep up with deeper pocketed rivals when it comes to creating that digital experience. What other risks do you see with companies in this space?
Yeah, time to turn on the banker brain. So revenue drivers are related to travel. So any large disruption to travel, like we saw in 2020, would be an existential threat to this kind of company. It's interesting to note that they were actually spun up in 2020. So it was a good time to start a transportation logistics company, apparently.
Yeah, for sure. Yeah, I guess luckily with minimal assets, they could likely scale down to meet demand where it's at. You know, I'm assuming they're leasing their fleet, which can provide great flexibility, but also if the lease is not in a great design, it could squeeze their margins. So there is good flexibility, but unless there's a big bank loan out there for some reason for a future acquirer, it's pretty clean.
Yeah, and I think with this kind of company, one of the top questions that would be on our mind is, what does a competitive moat look like? What could their competitive moat look like, Rob?
Well, how do they ensure their market share is not eaten up with every new entrant? I mean, it's a bit of a wild card, but do they have any special arrangements with airports or hotels to be the exclusive provider? It's not an easy barrier. It's not an easy area to typically access, and there is a bit of a moat once you're in. But and really, what do these contracts look like? I mean, $3 million in revenue. It's a fairly substantial amount for driving cars at airports. Like that's a lot of trips. And I wonder if they have other revenue streams or services that could help differentiate them and protect them from direct competition.
Yeah, we can't see that directly from the listing, but it seems likely that there's some other services. Maybe that's some of the logistics services that they're providing. You know, on the cost side, they're likely looking at drivers' wages, fuel, airport access fees, like you mentioned, and fleet maintenance. So, you know, these costs can be volatile, especially fuel. It may not be able to be passed along to the end user in terms of those price increases because of competition. You know, this could be one of the reasons why we're actually seeing a relatively low profit margin of $270,000 on 2 million or 3 million in revenue.
Yeah, good point, Eamon. I guess really now the elephant in the room is location. Can Canadian buyers make an acquisition like this?
Yeah, it's interesting. We've certainly had a number of clients on either side of the border interested in making acquisitions on the other side. For Canadians buying in the US, what they need to know is that a lot of the small business acquisition market is supported by the Small Business Acquisition Program, SBA loans. The caveat to accessing that, and I guess to back up, that is a government guaranteed program, so it makes the banks want to take on a little extra risk that they may not take otherwise. The caveat is that the acquiring entity must be 51% or greater owned by a U.S. citizen. So without access to SBA lending, let's say you're just a Canadian with no U.S. partner, Canadians are relying typically on general commercial banking groups to finance any funding shortfall. This can be accomplished, but it's difficult when EBITDA is less than 2 or 3 million, because that's really considered small business by U.S. banks, and their small business groups don't often do cash flow term loans like the one that would be required in this situation. So it's possible. It would be easier if you had access to a U.S. partner, but not a showstopper.
Yeah, excellent. I mean, and additionally, the valuation seems to be a bit rich with an asking price, almost 7.5 times SDE. More common valuations around 2 to 3 times SDE.
Yeah, it'd likely be necessary to ask the seller to finance at least a portion of the acquisition. You know, the bank's going to be limited to a certain number of turns of cash flow, which isn't going to get you up to that $2 million price. So you're likely going to be relying on the seller to finance a bit of the transaction.
Yeah, and I think the seller is retiring, as it says. But I like the growing market segment, the flexibility of a low asset base and a client profile. Also seems possible potentially to run the business remotely or partially remotely, which may be a benefit to a Canadian buyer.
Yeah, that's true. And, you know, the downsides are the low margin, although maybe that's different with historical financials, a high valuation, and a question mark around the ability to finance with bank debt.
Yeah, well, it sounds good enough to reach out and find out more.
Yeah, absolutely. And so this listing can be found on Village Wealth Marketplace, along with many other opportunities. Take some time to see what's in your area. And that does it for this week's Deal Decode. See you next time. Thanks for joining, Rob.
Thanks. Have a great day, everyone.